Most beginners think investing is complicated. Charts, stocks, crypto, market timing, endless information. And because of this confusion, they assume the biggest mistake is choosing the wrong stock or buying at the wrong time. But the truth is very different. The biggest investing mistake beginners make is not about what they buy. It's about why they don't start or why they stop too early. Most people enter investing with the wrong expectation. They expect fast results, quick profits, instant growth, because everywhere they look, they see success stories. Turned $1,000 into $10,000, made money in a week, early retirement at 30. And this creates a false idea that investing is supposed to be exciting. But real investing is the opposite. It is slow, boring, and extremely consistent. The biggest mistake begins here. When beginners don't see quick results, they assume it's not working. They lose patience, they panic, they sell early, or they stop investing completely. And this is where most people lose the game, not in the beginning of investing, but in the middle of it. Because investing is not a sprint, it is a long-term process. And in long-term investing, time matters more than timing. But beginners often focus on timing the market. Should I wait for a dip? Is now the right time? What if the price goes lower? And while they are waiting for the perfect moment, time keeps passing and opportunity quietly compounds for others. There is another major mistake beginners make. They try to predict instead of participate. They believe they need perfect knowledge, perfect strategy, perfect entry point. But in reality, even professionals don't predict markets perfectly. They simply stay invested longer and stay consistent. Now let's talk about emotions, because investing is not just financial, it is psychological. When markets go up, beginners feel excited. When markets go down, beginners feel fear. And this emotional cycle causes bad decisions. They buy high when excitement is strong and sell low when fear takes over. This is the exact opposite of successful investing behavior. Another hidden mistake is inconsistency. Some beginners start investing, but only when they feel confident, or when they have extra money, or when market news feels positive. But wealth is not built through random actions. It is built through consistent actions, whether the market is up or down, whether motivation is high or low. Now, here's something important. Most beginners think investing mistakes are about losing money, but the real loss is not temporary losses. It is lost time, because time is the most powerful force in investing. A small amount invested early can grow significantly over time, but when someone delays or stops, they lose the effect of compounding, and compounding is something you cannot recover later. There is also another mistake beginners don't realize. They compare themselves with others. Someone made profit, someone got rich quickly, someone claims success online, and suddenly they feel behind. This leads to emotional decisions, trying to catch up, taking unnecessary risks, chasing quick returns, and this usually ends badly. The truth is simple. Successful investing is not about being smart, it is about being patient. It is about consistency. It is about ignoring noise and focusing on long-term growth. But beginners often do the opposite. They overthink, they react emotionally, and they expect quick results. So what is the real biggest mistake beginners make? It is not lack of knowledge. It is not lack of opportunity. It is not even lack of money. It is lack of patience and consistency. Because investing rewards people who stay in the game long enough, not people who try to win quickly. And here's the most important part. Every expert investor today was once a beginner. The difference is not talent. The difference is time spent staying invested. And mistakes were part of the journey, but quitting early was avoided. At the end of the day, investing is simple in theory, but difficult in behavior, because it requires you to do something most people struggle with. Stay consistent when nothing feels exciting. Stay calm when markets move, and stay invested when results feel slow. So if you are just starting, remember this. The biggest mistake is not starting perfectly, it is not starting at all, or stopping too soon. Because in investing, time in the market always beats timing the market. And those who understand this early give themselves the biggest advantage in wealth building.